Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's top story with you. We're starting off with a conversation about the current state of emerging markets and how they may be poised for a comeback. According to Mark Matthews, a strategist at Julius Baer, emerging markets have been underperformers for over a decade, but they may now look attractive due to the weakness in the US dollar. Matthews notes that many emerging markets are genuinely cheap, with some trading at around 4 times price to earnings, compared to India, which is trading at around 20 times price to earnings. Now, it's worth noting that not all emerging markets are created equal, and investors should be selective when choosing where to put their money. Matthews suggests that countries like Egypt, which have implemented reforms and are allowing their currency to trade at market prices, may be worth considering. But what about India specifically? Matthews says that while the country has performed well over the last 10 to 15 years, it's now looking a bit expensive. However, he does see opportunities in certain sectors, such as banking and hospitality. In fact, Matthews believes that the hospitality sector could be a particularly interesting play, given India's rising middle class and increasing demand for travel and leisure. It's also worth mentioning that the current tariff situation is not seen as a major concern by investors, with many believing that it will not have a significant impact on the US or global economy. As a result, investors are actively buying into emerging markets, rather than waiting on the sidelines for clarity on tariffs. Of course, as always, it's essential to approach any investment decision with caution and careful consideration. We'll be keeping a close eye on these developments and bringing you more analysis and insights in future episodes. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our exploration of the latest developments that could impact your financial well-being. In our previous segment, we delved into the world of market trends and economic indicators. Now, let's shift our focus to a significant appointment in the United States that has sparked considerable debate. President Donald Trump has nominated Antoni, a conservative economist from the Heritage Foundation, to lead the Bureau of Labor Statistics, BLS. This move comes after Trump fired the previous bureau chief, Erica McIntyre, accusing her of tampering with an employment report without providing evidence to support his claims. The BLS plays a crucial role in collecting and publishing data on employment and inflation, which are vital for policymakers, investors, and individuals making informed decisions. The nomination of Antoni, who has been critical of the previous administration's economic policies, has raised concerns about the potential politicization of these statistics. On one hand, proponents of Antoni's nomination argue that he brings a fresh perspective and a commitment to ensuring the accuracy of the data. They point out that revisions to initial jobs estimates are not uncommon and that the BLS has faced challenges in recent years due to the COVID-19 pandemic. On the other hand, critics express concerns about Antoni's lack of experience in leading a statistical agency and his history of partisanship. They worry that his appointment could undermine the credibility of the BLS and compromise the integrity of its data. It's essential to acknowledge that the BLS has faced challenges in maintaining the quality of its data, including a hiring freeze imposed by the Trump administration. The agency's ability to collect and analyze accurate data is critical for informing economic decisions and ensuring that policymakers have the information they need to make informed choices. As we consider this development, it's crucial to approach the topic with a nuanced perspective, recognizing both the potential benefits and drawbacks of Antoni's nomination. We must also remember that the integrity of statistical agencies like the BLS is essential for maintaining trust in the data they provide. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest developments in the global economy. As we've been discussing, the trade tensions between the US and China have been a major concern for investors, and it seems like there's been some progress on that front. According to recent reports, President Donald Trump has extended a pause of tariffs on Chinese goods for another 90 days into early November. This move has been seen as a positive step towards resolving the trade dispute, but it's still unclear whether a deal will be reached. Meanwhile, data due out this week is expected to show a slight pickup in inflation in the U.S., with the core consumer price index forecast to rise by 0.3% in July. This could have implications for interest rates, with some analysts predicting that the Federal Reserve may not cut rates as deeply as previously thought. In other news, the Fed's two vice chairs, Michelle Bowman and Philip Jefferson, and Dallas Fed President Lori Logan are reportedly under consideration to serve as chair of the central bank when the position opens up next year. This could potentially impact the direction of monetary policy in the U.S. It's also worth noting that Australia's central bank is expected to deliver its third interest rate cut this year on Tuesday, as inflationary pressures continue to ease. Governor Michelle Bullock is likely to maintain a cautious stance on monetary policy, given the ongoing uncertainty in the global economy. As we close out today's show, it's clear that there are still many risks and uncertainties in the market. While some progress has been made on trade, there's still a long way to go before we can say that the global economy is back on track. So what does this mean for investors? As always, it's essential to remain cautious and diversified in your investment approach. Keep a close eye on developments in the US-China trade dispute, as well as the latest economic data and central bank decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.